The Australian dollar's fate hangs in the balance as traders anxiously await the RBA's next move. The Australian dollar to US dollar pair's recent performance. The Australian dollar, AUD, takes a breather against the US dollar, USD, ending a 3-day losing streak. But the respite might be short-lived as the USD gains strength due to fading hopes of a Fed rate cut in December. This could put pressure on the Australian dollar to US dollar pair, potentially leading to further losses. Economic data impact. Monday's economic data from Australia and China had little impact on the AUD. The TDMI inflation gauge showed a 0.3% MOM rise in October, a slight slowdown from September's 0.4%, but still the second consecutive monthly increase. The annual inflation rate edged up to 3.1%. Australia's building permits rose 12% MOM, surpassing market expectations, while ANZ job advertisements continued their downward trend, falling 2.2% MOM in October. China's influence. China's rating dog manufacturing PMI slipped to 50.6 in October, below expectations. This is significant because China's economic health directly impacts the AUD due to their strong trade relationship. RBA's policy decision. Traders are cautious ahead of the RBA's policy announcement on Tuesday. The bank is expected to keep rates on hold after 3 consecutive cuts, as Q2 inflation remained within the target range. But here's where it gets controversial. Some analysts argue that the RBA might surprise with a rate cut, citing a tight labor market and the need to stimulate the economy. US dollar's strength. The US dollar index, DXY, gains traction, trading around 99.80, as the likelihood of a Fed rate cut diminishes. Fed funds futures traders now see a 69% chance of a December cut, down from 93% last week. Fed Chair Jerome Powell's comments suggest a cautious approach, emphasizing the need for more data. Fed rate cut decision. The U.S. Fed cut rates by 25 basis points on Wednesday, but the decision was not unanimous. The ongoing government shutdown adds to the uncertainty, potentially affecting the U.S. economy and the Fed's future decisions. China's PMI data. China's NBS manufacturing PMI dropped to 49.0 in October, while the NBS non-manufacturing PMI unexpectedly rose to 50.1. These mixed signals from China add complexity to the AUD's outlook. RBA's CPI and AUD's reaction. The RBA's Q3 trimmed mean CPI rose 1% quarterly and 3% annually, beating market estimates. Australia's hotter-than-expected inflation data reduced near-term rate cut expectations from the RBA. RBA Governor Bullock highlighted the tight labor market, despite a surprising unemployment rate increase. Technical analysis. Australian dollar to US dollar is trading at 0.6550, with technical charts indicating a consolidation phase. The pair is above the 9-day EMA, suggesting strong short-term momentum. Key resistance is at 0.6600, and a break above could lead to a bullish run towards the 13-month high of 0.6707. On the downside, support lies at the 9-day EMA of 0.6544. A break below this level could trigger a decline towards the rectangle's lower boundary at 0.6460 and potentially the 5-month low of 0.6414. AUD's performance against major currencies. The Australian dollar performed well against major currencies, especially the British pound. The heat map illustrates these percentage changes, offering a quick overview of AUD's strength. RBA's role and monetary policy. The RBA plays a crucial role in setting interest rates and managing Australia's monetary policy. Its primary goal is to maintain price stability, targeting a 2 to 3% inflation rate. Interestingly, Higher inflation can now attract global investors, strengthening the AUD. This is a stark contrast to the traditional view of inflation as a currency devaluator. Macroeconomic data and AUD. Macroeconomic data, such as GDP and PMIs, significantly influence the AUD. A strong economy may prompt the RBA to raise interest rates, supporting the AUD. Quantitative easing and tightening are additional tools the RBA can use to manage the economy and the AUD's value. Quantitative easing and tightening. QE involves the RBA printing AUD to buy assets, providing liquidity to financial institutions. This typically weakens the AUD. QT, on the other hand, is the reverse process, undertaken during economic recovery, and can be positive for the AUD. And this is the part most people miss. The RBA's decisions have a profound impact on the AUD's performance, and understanding these relationships is key to predicting currency movements. What's your take on the RBA's potential rate cut? Do you think it's a necessary move, or should they hold off for now? Share your thoughts in the comments.